Hi there. Today I'm going to do a quick review of a Fortune magazine article that was written by Lance Lambert. It highlights how the easing of mortgage interest rates over the past couple of months may be putting the Fed in a bit of a bind. So let's dive right in. So here we go. Signs of life in the U.S. housing market could make our jobs harder, says Fed's Neel Kashkari. It's clear that the free fall in U.S. home sales, which went into sharp contraction after the Federal Reserve's inflation fight, saw mortgage rates spike from 3% to over 7% in 2022, is behind us. Well, I guess I'd say we'll have to see about that. Some of the stuff that they say in the article might lead us to believe that maybe it's not. But back to the article. On Wednesday, we learned that the seasonally adjusted mortgage purchase application index ticked up 3.1% last week to 190. On the one hand, it remains far below the 282 reading it had during the same week in 2022, but it's also up from and has stabilized after bottoming out at 159 during the first week of January. While realtors and builders alike are cheering this news, improved housing data is getting a lukewarm reception from the Fed. Housing is a huge component of the CPI, and the Fed's mandate is to push that inflation number down. If you get some value out of this video, I hope that you'll take a second and hit that like button. That'll help the YouTube algorithm put this in front of more folks who'd be interested. Thanks! The Minneapolis Fed President Neel Kashkari said Tuesday on CNBC that the Wall Street Journal had a report that the U.S. housing market's starting to show signs of life again because mortgage rates have come back down. That's not great news for the Fed, according to Mr. Kashkari. You're right that it does make our jobs harder to bring the economy into balance. All things being equal, we'd have to do more with other tools. We'll learn what those tools are a bit later. In the second half of 2022, spiked interest rates helped push U.S. home prices down 2.5% from their 2022 peak. As you can see here in this chart, this is Case-Shiller month-over-month changes back to 1990. And you can see here's the Great Recession with all this red. And then it's been solid blue to varying degrees with a big bump up here. And then you can see we're in the red again. Now, one thing to keep in mind is that the Case-Shiller uses a composite of some of the major metros from around the country, and that real estate is a very local business. Speaking of local real estate information, if you'd like to get the most up-to-date data for your local real estate market, stick around to the end for more details about how you can get your own private access to the most current real estate statistics for any zip code in the county or anywhere in the U.S. for that matter. But let's keep rolling through that article. So, if financial conditions were to continue to loosen, Kashkari said, the Fed would look to use other tools. And the CNBC anchor then asked Kashkari to clarify what he meant. We all know what happens when the Fed pushes the federal funds rate up. That's what happened in the second half of 2022. But the question is, what's the balance sheet? Of course, if the federal funds rate were to rise higher than expected, financial markets would, in theory, put additional upward pressure on long-term rates like mortgage rates. However, the biggest deal for real estate agents and brokers might be the suggestion of using the balance sheet. So the Fed's quantitative easing program during the pandemic saw the central bank's holdings of Treasury securities rise to $5.4 trillion and mortgage-backed securities climb to $2.6 trillion. If the Fed were to sell off some of those mortgage-backed securities, in theory, it'd push mortgage rates even higher. So the question is, how likely is the Fed to sell off those mortgage-backed securities? Right now, it doesn't look like it's in the cards. While speaking to the Economic Club of Washington on Wednesday, Federal Chair Jerome Powell said that offloading mortgage-backed securities isn't currently being discussed. But if they're not able to get things in control with the tools they've been using, they might have to. If you're a bit of a real estate nerd and you'd like to access the most current stats for what's happening in our local real estate market, or any zip code in the country for that matter, then you'll want to click on the link below to get access to my Altos research portal. Altos is the portal that investors, brokers, and agents use to find out what's going on all over the country right now. The uncertainty about what the Fed's going to do, along with an encouraging jobs report, has actually turned mortgage rates around, and they've moved back up a bit over the past week or two. They had been steadily moving down since November. They're still well below the 7.25% that they were, but they're now sitting in sort of the middle sixes. There's definitely been a bit of a pullback. We'll have to see how things go in the next few weeks. If you'd like to see my most recent video, you can click over here. And if you'd like to subscribe to my channel to keep updated whenever new videos come out, click over there. I hope you have a great rest of your day, and I'll see you on the next one.